Across live to Parliament, where Godfrey is standing by with some of the Treasury's Deputy Director Generals, Matthew Simmonds for fiscal policy. And we've also got Thuto Shomang. He is head of Shomang is head of assets and liabilities management. Godfrey.
Bronwyn, thank you. Indeed, we're live again in the precinct of Parliament, and I've got the two gentlemen from the National Treasury. As you said, Thuto Shomang, he's the head of Asset and Liability Management Division, and Matthew Simmonds, he's the Deputy Director General, the Budget Office. Gentlemen, thank you for coming. Let me begin with you, Matthew, perhaps so we set the scene in terms of the overall budget framework for this year. Now, there have been many new things that have been said. Just to recap, give us a sense of what's new in this budget, and then we'll go through the various issues one by one.
I think that perhaps the most important message coming out of this budget is around the need for government to respond, and the broader economy as a collective with government to respond to a shifting global dynamic, one in which there are both new and interesting challenges, but also new and interesting opportunities which will require us to approach things quite differently. So the infrastructure theme is, I think, a large part of that. But of course, the broader structure of government spending, as well as the value for money agenda of government, is of course a very important part of that story too.
Yeah. Now, one of the criticisms that I've had, and not that there have been many, in fact, the overall impression that has come through from all people that I've been talking to suggests that this is one of the better budgets that we've seen coming through the years. Not that you guys are worried too much about that, but one of the criticisms has been that the Treasury could have been perhaps been a little bolder in terms of the incentives that it puts in place to try and create the jobs that South Africa needs. We're talking of growth below 2.7% for 2012-2013 against a target of 7%, which will enable us to start making a dent on that unemployment rate.
I think certainly growth is a very important, probably the central challenge that we face at this stage. Not growth in its own right, as you put, but growth because it goes hand in hand with job creation. And government has certainly contributed what it can towards that. There is the expanded public works agenda. There's, of course, been quite aggressive employment creation by government departments over the last couple of years. And in the face of the economic downturn, government has sustained growth in its spending in order to provide that support to government. There are new initiatives which are announced, the infrastructure agenda, again, to come back to that. Also, there is the manufacturing and competitiveness support package. But at the end of the day, growth is about the private sector really driving as an engine of growth, and what government can do to enable that over the long term. We mustn't, though, get away from the fact that this is a very challenging economic circumstance. We can't expect we can't overcommit and we can't over-expect from the various agents within the economy.
Sure. Thuto, let me come to you. Now, you're in charge, or you work in the division that deals with bond issuance, and the general sense, all the commentary that I've seen says this is a very bond-friendly budget. What we're seeing overall is a reduction in issuance over the years. At the same time, some people are suggesting that perhaps this budget was influenced, perhaps inordinately, by consideration of the rating agencies in terms of what they would do to South Africa, given the warnings that came before the budget was announced. When you were framing up that bond issuance program, what were you guys thinking about? Was that uppermost in your mind?
Not necessarily. I mean, our responsibility is to fund the borrowing requirement of government. The budget office represented by Matthew determines the overall deficit based on the economic forecast and based on our expectation of the revenue going forward.
Sure.
So the way the budget was crafted, and the way we respond in terms of our borrowing requirement has to do with the fact that we have a borrowing requirement that need to finance, and the borrowing requirement is a function of the difference between what we expect from expenditure and revenue.
Yeah, and that public requirement for borrowing is coming down effectively over the coming years to, I think, about 5%.
Yes.
Now, just in terms of how you're going to fund that, just give us a breakdown. How much is going to be domestic? How much is going to be foreign?
Mainly we borrow in the domestic market.
Sure.
Our domestic market is very liquid, and our investors in the domestic market has continued to support our issuance. We had penciled in over the next 3 years about $3 billion that we'll borrow in the international capital market.
Right.
And the reason why we borrow in the international capital market is mainly to establish benchmark for the other entities in South Africa,
Sure.
mainly corporates and government-owned entities. You will see that, in terms of the borrowing requirement, our state-owned entities are expected also to play a major role in terms of infrastructure spending.
Yeah.
So they're expected to enter the markets to borrow. So it is important for us that we create those benchmark bonds or create the yield curve basically in the international capital market for SOEs to be able to price their bonds.
Yeah, one of the early comments that I saw suggested that the weekly bond auction isn't likely to increase much, likely to stay around 2.1 billion rand. Is that an accurate reflection of what you guys crafted?
Yes, I mean, we expect that our weekly issuance will remain around 3 billion. In fact, it's 3 billion. If you take the Tuesday auction for the fixed income rate bonds, and also the Friday auction of the inflation-linked bond. So on average, we raise about 3 billion rands on a weekly basis, and we think that there's no need for us to increase that issuance.
Yeah, Matthew, let's come back to the new initiatives. One of the new initiatives was some people are calling it an extra layer in government, the public procurement officers that are going to be mandated to deal with the whole issue around procurement of government agencies. Don't you dare overcharge the government. The minister said if a computer costs 7,000 rand, we're not going to pay 10,000 rand. In terms of implementation though, how do we make sure that this extra layer of government is actually effective? I put the question to the minister, but he said, no, the question should be actually that we are taking action. But from your perspective, how do we make it effective and different from past initiatives?
Well, I think that this is, as you put it, a new initiative. It is something that comes out of a series of discussions and a series of considerations as to how we deal with the procurement and the value for money challenge within government. And it's now a matter between the Minister of Finance, the Minister of Public Works, and probably the Minister of Public Service and Administration to think about how they go about giving it practical effect. I think that, we got to, though, keep in mind that while these kinds of reforms are important and can be very important factors in enabling a different procurement environment, a more efficient procurement environment, at the end of the day, monitoring and oversight and regulations also play a very important role.
True.
As soon as there is a human factor, these kinds of things are always going to be something one needs to guard against. So there is a need for a coordinated approach on this, and certainly we look forward to seeing how it evolves and the opportunities it gives us for pursuing greater value for money in public services. Yeah,
I'm going to come back to the issue around capacity, because one of the comments made by one of our guests was the fact that he doesn't trust that the government has got the capacity nor the ability to implement some of these new initiatives. But let's talk about the no-shows in this budget. One of the biggest surprises for people that were expecting something to be said about was around the issue of a tax on mining. Some call it super profit tax, etc., that didn't come through, number one. Number two, there also was no mention of exchange controls. There was absolutely zilch in the budget, unless if you're going to correct me now. And thirdly, the NHI. People expected an update, or at least an announcement of a framework under which this will go. Were those things overlooked, or was this deliberate?
No, I don't think they were overlooked at all, and I don't think it's correct to say that they weren't dealt with. I think starting with the NHI, there is certainly a lot more detail than we've had. You've got to keep in mind that this is an extensive and very broad reform. It's likely to take place over the next 15 or so years, beginning essentially with the transformation of the quality of public health services. The Minister of Health has spoken to that in some depth today, and I'm sure that this will remain a very important and prominent issue. I think. How far out though are we in terms of implementation and seeing concrete proposals on the ground? We have what is the piloting of a number of initiatives, and that is covered within the budget review, and also the Department of Health needs to provide the information on that, but that is financed, and there is some discussion of that, and of course the challenges around pooling and financing of the risk and financing of the broader program. there is quite extensive discussion on that in the Social Security chapter that is contained in the budget review.
In fact, that's where the comment came in on a government's capacity and ability to be able to implement a complex program such as an NHI.
Capacity in government is always a challenge. It's always a concern. That shouldn't though stop us from being ambitious. Of course, it requires us to be very focused and very direct in terms of dealing with those capacity problems. Sure. Also realistic, and I think that is important in this respect and in others. Okay. But the development challenge here is enormous, and we need to look into creative, ambitious ways of beginning to deal with that. Sure. The mining tax is a proposal that has been announced by the ANC as a political party. It needs to be discussed within that environment, and it needs to come into the budget process through the normal channels by which these kinds of policy issues are filtered into the broader government policy environment. So at this stage, it's not something.
Can I put you on the spot by saying perhaps we're not going to see this in the next budget?
I would say that you need to speak to the minister about that. There's clearly an important issue about redistribution within this economy, redistribution within sectors where there are the potential for very large profits. Yeah. So it is an important public finance issue, but there's a long way that I think the discussion needs to progress. Sure. And then my colleague Ishmael Mamomiat can talk, who's I believe you're speaking to just now, yes, can talk to the foreign exchange issue.
He's certainly listening. I'm hoping certainly that you'll give us greater detail on that. Let me come back to you, Thuto, on the bond perspective. Now, you told us that you're looking at 3 billion over how many years? The next 3 years?
Yes, over 3 years.
Okay. So when can you give us sort of like a timetable in terms of that issuance?
Well, I mean, I think we are referring to the
foreign component
issuance. I mean, what we have penciled in our budget is 1.5 billion borrowing in 2013-14 and about $1 billion in 2014-15.
Right.
I mean, our borrowing in the international capital markets for benchmark purposes. I mean, we do most of our funding in the domestic market. You will have noted that we have announced 5 new bonds in the domestic market, 2 new fixed income bonds, and 3 inflation-linked bonds. And mainly we're responding to the demand, in particularly in relation to the inflation-linked bonds, you know, to the investor base that we have in this country who requires to match their assets and liabilities, and they require longer dated instrument that will help them to manage their asset and liability management. Yeah. However, also in terms of our funding, we are always mindful of the refinancing risk. So we needed a new instrument to be able to manage the refinancing risk. I mean, the reason why the issue of the refinancing risk is that we don't want to issue 100 billion into one bond.
Yeah, sure.
Because you know, when the time we reach a time where we need to refinance it, it might be a problem.
Yeah. One of the new ones is the 39-year one. What kind of demand do you anticipate on that one?
Look, we expect that it will be well received by the insurance industry. And also the pension funds, particularly these are the mainly 2 investors sectors who require longer dated instruments.
Sure.
Previously, people used to use the equity market to hedge their long-term liabilities, particularly from insurance. But there's a realization that instruments like inflation-linked bonds perfectly deal with those asset and liability mismatch that they have in their books.
Absolutely. Thuto Shomang, Head Asset and Liability Management Division, thank you for joining us. Matthew Simmonds, Deputy Director, General Budget Office. Gentlemen, thank you for joining us.